So you're shopping for a lender for your home mortgage, and you're doing what most of us do. You're looking for the lowest interest rate you can find. Well, that's fine. We've all done that. But there's one very important part of your home loan you should be shopping for that most of us don't even know is a variable that we should be shopping for. And that one thing will literally save you hundreds of dollars on your monthly payment. Hi, I'm Bob Wolverton. I'm with Pure Real Estate in Bellevue, Washington. Here on YouTube, I'm known as your Northwest Realty Advisor. When we come back after this 8-second break, I'm going to give you some tips that will save you hundreds of dollars on your monthly payment and potentially thousands of dollars in your closing costs. So stick around. I've been a homeowner for more than 30 years. I've owned a few different properties, I've had different mortgages, and I've been involved with the real estate industry for more than 15 years. And what I'm going to share with you today, I just learned last week, and it's extremely important for everyone to understand this. I also know that many of my subscribers on this YouTube channel are real estate agents from all around the country. And as real estate professionals, I encourage all of you to verify this information with your local lenders to make sure you are providing your clients with the best and most affordable loan options for them. So let's get started. First of all, when you're shopping for a lender, you want to find a mortgage broker. Because in the hierarchy of potential lenders and their corresponding interest rates and fees, also known as closing cost, your lowest cost will be with a mortgage broker. The next on the scale is a bank, and third on the scale is a mortgage company. When you deal with a bank or a mortgage company, the fees and rates will usually be higher because they have a lot of overhead to pay for. When you see those beautiful brick and mortar buildings, you see those national advertising campaigns, and those impressive apps for your smartphone, someone's paying for all that, and it comes out of the top line on the business balance sheet. And that top line is revenue. That's the part you're paying into as the customer. Now, banks are easy to identify. You know when you're working with a bank. But mortgage companies are a little less obvious. When I'm talking about mortgage companies, I'm talking about places like Fairway, New American, Guild, and Caliber, and many others. Now, the easiest way for you to figure out who you're dealing with is to ask them this question. Do you work for a mortgage company or are you a mortgage broker? And what you want to find is a mortgage broker because they will generally have lower fees and lower overall closing costs and lower interest rates in comparison to banks and mortgage companies. Now, here's the key thing that most people don't know. There are different rates on private mortgage insurance, commonly referred to as PMI. If you make a down payment of less than 20%, you will have to pay PMI. This is basically an insurance policy that you're paying for that provides insurance to the lender that if you default on the loan, the insurance will make the lender whole on your default. Once you get to the point where you have 20% equity in your home, you can have the PMI removed from your monthly payment. And that 20% equity can be achieved through paying down the principal on the loan, and or through appreciation on the value of your home. Now, here's what you need to know about PMI. Mortgage companies usually obtain their mortgage insurance through retail mortgage insurance companies. Banks usually carry their own mortgage insurance, and as a result, in both instances, you're going to pay way more for private mortgage insurance than you will with a mortgage broker, because mortgage brokers get their mortgage insurance through the wholesale market. Now, the rate that determines your cost for the premiums charged for PMI are called the factor. With a mortgage broker, that factor may be as little as 0.20, whereas with banks and mortgage companies, the factor may be as high as 0.89 or 0.93. So let's see how this factor calculates out for you. Let's assume you're getting a $500,000 loan and a factor of 0.20, and it's calculated like this. $500,000 times 0.0020 divided by 12 equals $83 a month. That would be your PMI payment with a factor of 0.20. But on the same loan, if you had a factor of 0.89, it would look like this. $500,000 times 0.0089 divided by 12 equals $370 a month. And even worse, if you had a factor of 0.93, it would look like this. $500,000 times 0.0093 divided by 12 equals $387 a month. That's more than an additional $300 a month just in PMI payments. And this PMI payment is also factored into how much of a loan you can qualify for when the lender compares your monthly payment affordability against your income. So the lower the PMI factor is, the more home you can qualify to buy. Now here's proof positive of what I'm talking about. Here's a text message from a customer who used a mortgage broker who I know. This customer used to work in the banking industry and, as stated in the text message, expected the PMI factor to be somewhere between 0.5 and 1.0, which would have put his PMI payments somewhere in the range of $241 to $483 per month. So this customer was pleasantly surprised when his monthly PMI payment was only $95 per month. Now, this customer got a loan for $579,500, and his factor was 0.20, and he had a credit score of 763. And yes, just like your mortgage interest rates, your credit score will also affect the factor that you can get on your private mortgage insurance. But as you can see from this chart, while a credit score of 763 is very good, it's not the highest possible credit score. And from this chart, you can see the 763 credit score is within the largest cohort of borrowers. So a PMI factor of 0.20 is very achievable for a large number of buyers if you know how to shop for the right mortgage insurance rate. So when you're shopping for a mortgage lender, we all compare the interest rate the lender is offering, but also make sure you are comparing all of the fees the lender is charging, otherwise known as closing costs, as well as what factor you are paying for your PMI. Now, remember that text message I showed you a moment ago? That message was sent to a lender who I work with and who I highly recommend, and his name is Larry Carl. If you are looking for a mortgage in Washington State, I highly recommend you give Larry a call and compare his PMI factor, his closing costs, his interest rates against any other lender. And I'm certain you'll be glad that you gave Larry a call. You see, Larry and I, we share the same business philosophy. We both believe that we're not trying to sell you anything. We both consider ourselves to be advisors that are giving you important information so you can make the best decision possible for your specific situation. I know Larry often tells his clients that he wants them to thoroughly understand the loan process, so by the time they get to closing, his customers will know enough that they can become mortgage brokers themselves. And if you're one of my many real estate agent subscribers around the country, start checking the PMI factor with the lenders in your state so you can be referring your clients to the most affordable option for them also. Well, that music means we're out of time for today. I hope you found value in today's video. If you did, please click that like button. That'll tell Google's algorithm to suggest this video to more people so they can also benefit from the information on this channel. If you have a real estate question that I haven't already answered on this YouTube channel, please put your question in the comments below, and I'll make a video specifically to answer your question. Because if it's a question you have, there's probably many other people who have the exact same question that they'd like to get an answer to also. If you'd like to contact me, you can find my email address and my telephone number in the description below and at the end of this video. Call me or email me. I would love to hear from you, and I'd love to represent you in your next real estate transaction. I'm Bob Wolverton. I'm with Pure Real Estate in Bellevue, Washington. Here on YouTube, I'm known as your Northwest Realty Advisor. What sets me apart from other real estate agents is on display right here on this YouTube channel. I share with you important topics you need to know in order to be an informed real estate consumer. And if you're interviewing real estate agents right now to represent you, and for some reason you're not calling me, well, then watch my videos titled, Are You Smarter Than a Real Estate Agent? And Are You Smarter Than a Real Estate Agent Too? And use those questions in those videos as your interview questions. Because the good agents, they'll know all the answers, but there are many, many agents who won't know the answers. But you will, because you watch my videos. And every Tuesday morning at 7 a.m., I post new videos about buying, selling, or investing in real estate, as well as some home tours and listing videos. I'll look forward to seeing you next week.